Bill here, and today we're going to talk about going through an inside bar scanner and what kind of things I like to look for to help me select a few of the tickers to actually watch that day, especially when there's a really large list. Friday was actually quite a small list, but these techniques and principles you can apply to any size list to find your tickers. Today I'm going to be using Tradietics Scanny, which finds inside bars, but it also finds a lot of other things and has interesting ways to filter the results of Scanny, which help me be efficient in my prep. These are things you can do manually too. If you don't have this scanner, you can just kind of flip through the names, pull them into your watch list, and kind of go through them one by one until you find the setups that you like. But basically, what I like to do is I first like to just sort by volume generally, because this tends to lead to the names I'm more familiar with. So on this list, things that I've traded before are Tilray, Macy's, and Twitter. The others, a lot of them some of them I've never really heard of. Some I'm familiar with, and no, I won't trade just based on doing this due diligence before. But basically what I would do is I'd pull in some names I'm interested in and start to sift through them and go through this process. And one of the first things I look for too is relative volume. So volume's just like what they had that day. Relative volume tells you if that was normal, less than average, or higher than average. So you sort here, 1.6, that basically means 1.6 times more volume than that stock does on average. And this can be a good indicator of maybe a move is going to happen. They say that volume precedes price action. So if you have a stock that's consolidating, which normally happens on a little bit lower volume, but is also putting in high relative volume, that could be a sign that a big move's coming. So when stocks put in days like that, I'll pull them in just to give them a look over and see if they meet some of my other criteria to be included on the watch list. So for example, the first thing I always look at is the contract volume of the stock. So here we have BMY. I wasn't too familiar with BMY, so I pulled it in just to give it a look. And what I first recognized was the low contract volume here. And for reference, I would say low is under 500 across different strikes here. Not even one comes close. You can also look at open interest, and sometimes those will maybe give you a little more reassurance that this stock actually does have people interested in playing options and buying and selling options on it. But for the most part, if it's under 500, I'm probably going to avoid it. And that's because you start to see these spreads like this, a 10-cent spread. They can be hard to get in out of, especially if you're about ready to cut for a loss, the stock's pulling back. And unless you want to just slap that bid and sell it for less than you could get for it, you're going to be chasing the mid price. So maybe in this instance, it's like 58. You hit 58, you try to sell it, and now it's at 56. And you try to sell it at 56, and now it's at 55, 54. And you end up chasing your tail, and what was going to be a 15 or 20% loss that's within your risk management now maybe is 30, 35, 40. I've had it happen to me multiple times, and that's when I just said, you know what? From now on, if there's not a good relative volume here on these contracts, I'm not playing that stock with options. So that's the first way. I'll just screen something out right away. So that goes, okay? And then from there, I'm going to start looking at the charts for different things, okay? So what am I going to be looking at? Well, fibs is a big one, or key levels. If you guys draw your levels by hand using different time frames, daily, hourly, whatever it is, if you find that a stock that's an IB is right near a key level, that could be more reason to be interested in that play, because you know how it works with support and resistance. If that's a key level and it breaks over it, there's a good chance it's going to have a nice move over it. If it loses support, or if it could also reject off resistance and make a move down. So those are more reasons to take an inside bar. Another thing is trends, trend breaks, and trend bounces. So here's Twitter. This is my favorite IB setup going into Monday because it has multiple things that I like. So we talked about, key levels. This is sitting right on top of a fib, the 382 fib from this run up here. And it also has some trend in the mix here, this trend line going back to April, that it's rejected twice, came down, tested and sort of consolidated right at it, big move over. And that's what I'm talking about. These key levels and trends, when they give up, when they give in, there's a lot of times you get a big move like that day with Twitter. Came back here, bounced off of it again, and now we're consolidating. And we've talked about this consolidation, and obviously inside bars are inherently consolidating, right? That's how they exist. But Twitter specifically likes to do this. It likes to consolidate for 4 or 5 days and then make a move. You can see it did it here. You can see it did it here. And if you go, you look left, you'll see it several other times. So that's kind of another reason I'm interested in it. And then another thing it has going for it is this gap, and that's demonstrated by these green dashed lines. This gap happened. The whole market kind of gapped down here, but gaps are great. And someone kind of mentioned in the chat, or asked me a question in the chat the other day about what if the gap's already been filled? And that's a good question. I find that these gap levels, like once they start, can kind of, they usually gaps there for a reason. Like these are key levels and they hold up well for going on weeks and sometimes months. Even if you look back before at these levels before this gap was created a few days ago, look at this line here. Go back. There was another gap that kind of came under this line. It tested it twice, this exact level that we now have a gap. It consolidated it under here in convergence with this trend line. So this is a pretty key level. And this gap fills here at 43, which is a major fib. This white fib, you notice it's thicker than the other fibs I drew. That's because it's a longer time frame fib. And this is what I call the COVID fib. Basically, on all my charts, I draw a fib from the low in March 2020, which is COVID lows, to the highs of that run-up that pretty much every stock experienced after COVID. And these levels have been holding up real well across the whole market. So Twitter has the gap that ends at the COVID fib, all right? It has the trend line down and more fibs as support. The 50 is the start of the golden zone of this shorter time frame. So I really like Twitter for that reason. It has all these different reasons to be excited about it. It also has some catalysts out there with the Elon Musk trial and everything. And all it takes is a couple tweets and this thing can make a move. So that's why I like that. Other things to think about on inside bars are relative strength or relative weakness of the name. And that's a big theme of all these Friday inside bars, because if you think about it, when SPY makes a move down over 3% in a day, that's pretty notable, right? And so most stocks are going to take a big hit on a day like that. Well, Fisker is only down 0.77%. And not only is it only down that, it put in a hammer candle off of a key fib here, the 786, which is the last in the golden zone, and hammered right off of it, okay? So this one has my interest for that reason. If the whole market's down and a stock puts in just a small red day, that leads me to believe that if Monday comes and maybe there's a little bit of a relief bounce in the market, this thing can go, right? Because it's had all that strength Friday. It's just waiting to go. It just needs some cooperation from SPY and the Qs to do it. So that's another thing to keep in mind. Relative strength or relative weakness could be a good sign of a move to come in either direction. And so basically, once I've dragged in a bunch of names and I go through this whole process, I might have like 5 or 6 tickers that I'm watching. And then in pre-market, what I do is kind of narrow that down even further to maybe 2 or 3 top watches. And how I do that is I just want to double check things that happened overnight. Sometimes we gap and we're way over the trigger, so maybe I take it off my list. Or I want to try to find tickers that are right near their triggers. So, you go into the 15-minute chart, and right now, Fisker's kind of trading in the middle. Twitter is actually kind of trading towards the bottom, which could be good for puts. But yeah, so in the morning, I kind of look, and if something's really near a trigger, then it has more of my attention because it's closer to making the breakout, right? And it was kind of like DVN was one of my top watches. Was it last week or 2 weeks ago? Where in pre-market it made that move right up to the trigger, and I was like, okay, this is my top watch now because it's looked like it wants to break out. So pay attention to pre-market, and it can help you narrow down your list even more when they're close to the triggers. But that is basically it for how I kind of go through the scans and pick what I like. And I think circling back on Tradietics, I talked about this relative volume. That's something you can just look for yourself manually when you drag tickers in, basically by doing something like, let's say SPY, which had great relative volume Friday. Basically, you'll see something like this candle's way over the average, the 20 VMA, and one of the biggest volume days it's had since like June. So that's something you can also add in to, give you extra conviction and stuff like that for your inside bars. But that's really it, guys. If you have any questions, let me know. Thank you very much.